everybody, George Moorhead, Bentley Properties, and today with me I have Dan Golden. He's with Cornerstone Home Lending. I've worked with Dan for years and years and years, and today we were going through kind of the market trends and interest rates, and we were writing some things down, and I said, yeah, you know what, Dan, this would be a great Facebook Live. Let's do this live. I want you to explain a few things, and in fact, this chart that he's going to show you, it is going to be posted along with Dan's contact information. So if you have any questions, you let me know. In the meantime, again, my name is George Moorhead. I've been practicing for about 27 years. We've done over 2,000 different residential and commercial transactions. Dan has been a contributor to many of them. And so today we're going to talk about basically credit, how it affects your mortgage payment, what it does, your buying power and everything else.
Yep.
So you know what, with that, Dan?
So yeah, thanks, George. So I'm Dan Golden, Cornerstone Home Lending. Been in the business about 25 years. Thanks for inviting me, George. So what I want to talk about today is really what affects your payment when it comes to credit. So a lot of people will call me and tell me what their credit score is, and when I hear that, I can give them a quote on a rate. But a lot of times those rates might change once I actually pull credit and see what the real credit score is. So one of the things that a lot of people don't realize is that credit scores, we use the middle of the 3 credit bureaus. So that's one big thing to understand. There's 3 credit bureaus. We use the middle. A lot of people have Credit Karma. They have different things on their credit card with their credit cards that show them what their current scores are. A lot of times that's only one score, not 2 or 3. We use the middle of the 3. So a lot of times,
So hang on. So 3.
Yep.
So what are the 3 that you commonly use? Because Credit Karma is not one of them.
Right. Well,
Okay.
it's the main bureau. So Equifax, TransUnion, and FICO.
Okay.
So you take those 3 scores, and we take the middle of the score, and we also take the middle of the lowest score if there's 2 borrowers.
So if you have TransUnion, you said FICO and Equifax?
Yeah.
Okay. So if the credit score is like 700 on this one and 650 on this one, and then let's say this one is 725.
Yep.
Which one are you taking?
The middle score.
You're going to take that one.
Yep. Okay. And then also something to keep in mind is if you are borrowing with a spouse or a significant other, we take the lowest of the middle of both borrowers. So if another borrower has similar scores,
okay. So this is the hubby.
Yep.
Right. And then we have the wife over here.
Yep.
And so if she has like a 550, 600,
yep,
and then 625.
so her middle score is 600, and we would look at that score, and we take the lowest of the 2.
So in essence, 600.
Right. Yes.
Holy smokers, Batman.
Right.
Okay.
Sometimes I'll try to qualify people on just one spouse if this is in this situation because it's a pretty dramatic.
Wanted to make it, a pretty broad spread. Okay. Before we get too much more into the credit aspect, what could we do in January versus what we do today? Or actually, it's the other way around. What can we do today versus what we did in January?
Right. So I kind of prepped for this a little bit, as you can see up here, my scribble scratching. So what I did is I took a $600,000 loan size, that's this number here, and today the rates for a fixed rate are around 3.5%, and a principal and interest payment for that equates to about $26.95.
Okay, so this number we use for our metrics that we look at the average for King County or Snohomish County. It's that median price point that you hear about in the media all the time. So that's where this number came from. But what is our maximum lending now, just real quick?
Well, 726 is the max for a conforming loan, and then you go to the jumbo bucket.
Okay, so 726,000 is the
size.
loan amount.
Right. Plus or down.
So if they had 5% down, I could go 726 plus 5%,
right,
and pull that back, and then that's going to give me,
right,
and that's just conforming, not jumbo.
correct.
Perfect. Everybody got that? Right on.
So then back to this. So today we're at 3.5. Back in January, we're in the mid 4s, 4.375, which that payment was $29.97. About $300 difference just because the rate dropped since that time. So it's about a 10% savings per month. Or what this would equate to is about about 50,000 in buying power. So then you could have this payment at $650 at that rate.
So what you're saying then, at this payment amount, or if I go to this payment amount, it gives me $50,000 more that I can purchase.
Approximately. Yeah.
Approximately.
Yeah.
That's pretty cool.
Yeah. So you
It's
could
amazing. For the same thing.
600 plus 50. Yeah.
All right. So with that, remember we discussed this when we went in brief, but I always promised Dan would be here. So now we're going to get to really kind of the nut of it. Now we've talked about rate, and people are like, yeah, rate, whatever. But now we're going to talk about how does your credit, how is it directly proportional to your payment? Okay. So we're going to do the magic window screen here, and look at that, Dan. It's like set up for you, buddy.
Yep.
Okay. So this is what?
Loan level pricing adjustments.
Okay.
Which what that means is if you have lower credit scores, the scenario we looked at on the other side was for the highest credit score person. Okay. So if you don't have, which 740 is pretty much the cutoff for a non-jumbo loan. If you have a 740 score, you're going to get the very best possible rates out there. And then if your scores are lower than that, that's going to change dramatically. This chart right here, you're going to have access to this at some point. I don't know how you do that, George.
We were going to post it.
All right.
We'll have them repost that for you with your contact.
Got it. So this chart will be available to you, which actually goes into detail about what I'm about to tell you. It's basically a matrix. You find your ballpark credit score, you find what you're putting down, and it will tell you the add-ons of how much you're having to add on to the pricing of a loan.
What does that mean, an add-on?
So if you have a lower score than 740, there's a half a point add-on, for example, which equates to usually about an eighth in rate. A half a point refers to the fee or the discount point.
Okay, so a point is
the cost to buy the rate down.
equal. Is it like 1%? Like one point
yes,
is
1% of the loan amount. Excuse me.
perfect. Okay.
So 1 point of this loan would be $6,000.
Whoa. So you're saying if I've got a really low credit score, this is going to cost me $12,000, $13,000, $14,000?
Yes. So in this example, I did a scenario where a 740 credit score at 3.5%, which it's around the going rate right now. If your score was 660 versus 740, I would look at this chart right here and I would find the down payment, and you'll see that it would be 2.25 point cost to have a 3.5% rate, the same rate,
Okay.
which equates to, like George said, in the $14,000, $15,000 range at this 600 loan amount. You could also build those points into the rate if you wanted to. So if you don't want to spend the $15,000 in points,
Right.
you can accept a higher rate in lieu of that, which right now equates to about 4.25.
Huh. Okay. So
Which is very similar to the other scenario.
we have two choices. One, if I'm cash heavy, then I can just pay the points
Yep.
to offset my credit score
Yep.
to maintain this 3.5 that good credit scores have.
Yep.
Or if I'm cash poor, actually that's probably not a good word, but if I don't have as much cash in my pocket, then I can actually increase my rate.
Limited cash.
Limited cash, is that what it is? I like that. But
Yes.
can a seller pay
Yes.
the points for me?
Yes, seller can pay those points. And there's one even cooler thing we can do.
Okay.
We can do what's called a rapid rescore. And this is a service that I offer to all my clients. There is a cost to it if you implement it, but it's well worth it. What that is if you were to apply with me, if I was to see your credit score, I can run it through a tool, and it will tell me the steps you can take to go from here to here or somewhere in between.
Okay.
Okay, which would allow you to basically increase your score rapidly. I can do it. It's a 2 to 3 week process. So if you were to get pre-approved with me, I see that you have 60 scores. A lot of times the lower scores are due to high credit card balances that are close to the limit. And I might say, pay this Visa card down by $5,000 and your scores will go up. And I've done it many times, and that would then, it's the best case scenario, you'd eliminate that right there.
So that's real money.
Yes.
And what does that cost them?
It depends on how many trade lines we have to correct. But again, this is a rapid rescore. This is if you need it done in 3 weeks. if you're not ready to buy for 3 or 4 months, which that's great. Love working with those kind of clients. I can get them prepared, and it doesn't cost them anything, and I can tell them what to do to get those scores up.
Okay. Yeah. When we talk about doing credit repair, that goes into that full pre-approval process.
Right.
Not a pre-qual where that's just a telephone call.
Right.
Kind of what you were talking about. Hey, my name is George. Here's my job. Here's my income.
Right.
Here's some basics, and you say here's approximate. A pre-approval is a little bit more in detail. Tell them a little bit of what a pre-approval does.
So a pre-qualification is you're calling me exactly what George just said, and I'm basically typing in your information, and I'm doing a quick pre-qualification where I calculate debt-to-income ratios. I trust that your score you tell me you think you have is correct, and it probably, honestly, I hate to say this, but it probably isn't. And you tell me how much money you have for down payment. I tell you, hey, this is probably what you can qualify for.
Okay.
The next level of that, there's actually 3 levels. The next level of that is pre-qualification. All of this is free, by the way, where you actually apply on my website, teamgolden.com. Once you apply, it'll automatically pull your credit. I'll know your credit score. I'll know what needs to happen to improve it. And that is, I can provide a stronger letter, essentially, if you were to go try to buy a home. I also usually try to collect, will collect all your documentation, which is 2 years bank statement, 2 years W-2s, pay stubs, and 2 months bank statements. And it just allows me to verify everything you're telling me, allows me to see your credit score. And that is most agents will accept that letter as a pre-approval. And then the final level is full underwritten approval, which again, I do this as well, where that is I actually submit your loan completely to an underwriter, and they review everything that I've done, everything you've told us, all the documentation, and it's like a 100% guarantee your loan's approved. That's underwritten approval.
That's underwritten.
Yes, that's a strong way.
Okay, so years ago, back in 2009, I came to you and I was frustrated because a lot of our buyer clients that were getting financed were having just huge problems competing against cash buyers. And even still sometime today, or somebody who's got maybe a larger down payment, right? And we said, yeah, there's got to be a way to work around this. Remember this?
Yes.
And so we noodled on this, and we noodled, then we was like, hey, what we could do at the time was a 7-day, but with TRID, right? That's this truth in lending stuff we have to do now. We came up with an 11-day close.
Right.
Tell them about this, because it's like being a cash buyer, but with financing.
Right.
Okay.
So what George is referring to, 11-day close, pre-approval goes to underwritten approval. You take all those steps before you go out and shop, before you go out and buy a house, and I will obtain a full underwritten approval, which is essentially like having the money ready for you. There is a 10-day disclosure process we have to go through. So you can't, it's not essentially ready that day, but if you apply with me, underwritten approved, I'll have a letter for you. You got to make an offer. You can make a 10-day close, 11-day close offer, and it's like being a cash buyer. And it's ready to go outside of appraisal and title. You're 100% approved.
So the best part is then, for all of you out there, okay, the best part is you've actually gone through what is typically the most arduous portion of the loan process. Boop, it's out of the way. The best part is that you now know if there's any small hiccups, or if there's anything that an underwriter is going to want, or even some small thing that you can do to improve your credit, you can take care of it then, so you can save serious cash here, right?
Right.
All right. Okay.
And you can make a stronger offer. You'll win offers that maybe are highly competitive.
As we have done to collectively, right?
Yeah.
And in fact, the first time we did this with some very, very dear clients of ours, they were the prevailing party on a multiple offer.
Right.
And so, guys, it works. It's absolutely awesome sauce. Because Dan is one of the few people that even offer this, or even offer really a tangible credit repair type of assistance. Can't say enough for him. He's absolutely awesome sauce. Wanted you guys to meet him. So
thank you.
Here's Dan. If you have any questions, post them up in the corner for us. We'll answer them. We'll have Dan's contact information for you. We're going to have this little chart here so you can take a look at it. Guys, the difference, $660, $640. This is almost, it's $14,000, $15,000, or in as far as rate. holy smokes, you're talking about $450 a month difference.
I think it's like 300. It's almost the same as the other side.
Well, this is 4.25. Hang on a second. Let's do the magic road here. So that was four. Okay, so yeah, about $350 a month.
Yep.
I like my number of 450 better. Anyway, if you guys are interested in saving money, if saving money on your mortgage each month is important to you, let me know. Let Dan know, more importantly. Again, there's no cost to it again, right? It's teamgolden.com,
Yep.
www.teamgolden.com.
Yep.
Free loan application, get some good information coming back.
Yep.
If they say, hey, drop my number, you will never call them again.
No, you'll get a call from you right away.
All right. Hey, everybody. It was absolutely fabulous, very impromptu. Hope you guys learned something. Let us know. Again, give us a big wow if you like it, a couple of hearts. Share it with your friends, and we'll share Dan with you guys just because we're nice. In the meantime, you guys have a great day. Hey, Dan, thanks again, man. Appreciate it.
Yeah.